Let's turn to Europe. The Eurozone economy has progressively weakened this year. Certainly the southern economies are in recession, and looks like they're finally going to drag down Germany and France with them as far as growth is concerned. Yet we're seeing some signs that the crisis is easing. Yields on Italy and Spain's government bonds have come down. Uri, what's your outlook for Europe next year, both in terms of the economy and the debt crisis?
Yeah, it's very negative. I think what we keep on seeing in Europe is just a cycle where there are agreements, and then they're sort of not kept to, and then there's negotiations and a crisis, and more negotiations. I think the problem there is that the populace just doesn't get it, and they don't understand that the decades of entitlement that they've had are over, and that it's a real world we live in, and there are bills to pay, and the governments there are generally so weak that they're not willing to bite the bullet that they need to. And I continue to believe, I don't think we'll see the end of the euro or the EU in 2013, but I do think we'll see it, by 2017, let's say, and maybe a lot sooner, as really the French and German populace, say, why are we supporting, the rest of the continent? And so I don't see that Europe's really taking care of their problems. I would look for, next to no growth from Europe in total, and I think it's going to continue to be a big drag on the global economy.
All right, you heard that, a call for the end of the euro perhaps in 2017, but not next year. Patty, what's your take specifically on Greece? It's really struggled to stay in the euro this year. The Troika seems to have finally agreed on measures that lessen Greece's debt load, give the country more time to pay back loans. But are those measures enough to keep Greece in the euro next year?
For the next year, probably. But really, what we're looking at is a longer-term time frame. And what we're looking at is a need for social and economic reform. And social and economic reform is something that's just not going to be easily done in that economy. So given that, I don't see that they are going to be able to get themselves out over the long run. This year, probably going to be fine. But the next couple, things are going to change, and I think they're going to change in a big way.
Brian, what's your take? What are the odds for a systemic shock from Europe next year?
Well, I think they've removed the systemic shock, whether it's the EFSF, the WWW, or the ZZZ, whatever plan they put in place. You're starting to see that, like the DAX off the peripheral bond yields, they've improved. The market, I always look at it, price is truth. And the market is not telling you, or it's not suggesting that we are going to get the shock. But like everybody else has said, I don't think you're going to see a land of growth by the second half of 2013, because ironically, the improvements that you're seeing in the market are not transmitting to the real economy. Things are actually getting worse in areas such as in Italy, believe it or not, big source of risk.
Uri, a question to you. Do you think that Spain asks for a bailout next year?
I'd say it's about a 50% possibility. Things aren't really improving there dramatically. Patty just mentioned Italy. Spain and Italy are top 10 global economies. They are infinitely more important than, Ireland, Greece, anything like that. So that would be an enormous, reasonable shock to the system. There isn't one global bank that isn't heavily tied into Spain, and I don't think we're out of the Spanish woods yet, and I'd put it about 50% chance of a bailout request next year.